Hey guys, what's up? Welcome back to my YouTube channel. So, UK house prices. According to the ONS, which is the Office for National Statistics, house prices in the UK have risen by 4.7%, which is the equivalent of like £11,000. Now, that is a lot of money for my investors. If you look further up north, you'll find that you can even see growth as high as 9% in areas like Nottingham. So that's a little hint there. If you're looking for an area to invest but aren't sure because you're not sure where it's going to be profitable, Nottingham's a good way to go. And if you haven't seen it already, you may want to refer back to my previous video, which talks about the 5 places to invest in the UK right now. So we've identified that house prices are increasing, but the question is, why exactly are they increasing? There's a lot more demand than supply. So there's more demand for houses than there is supply. And so that means prices are shooting up. So now that we know that increased demand is the driving factor of this increase in house prices, let's look at what's causing this increase in demand and basically this increase in house purchases. So first of all, we've got pent-up demand from the first lockdown. Now, during the first lockdown, or should I say prior to that, a lot of people were actually going through the process of buying a house, whether they were just starting or they were actually, in the middle of doing it. A lot of that had to be put on hold, and that's why right now we're seeing a lot of purchases go through, because obviously people are now trying to get things done that had been put on hold. In addition to that, a lot more mortgage products are now available. So whereby previously like LTVs of even 15% you weren't able to get during lockdown, now I think a lot of banks and lenders have opened that up again, and basically it's a lot more affordable and easier for more people to get mortgages than during the last lockdown. Secondly, a lot of people want to take advantage of the stamp duty holiday. Now, this stamp duty holiday is due to end in March 2021. Yes, they may be looking at an extension, but it has not yet been confirmed whether this extension will go through. And so obviously a lot of people want to take advantage of this. Why spend thousands of pounds in additional money on, stamp duty when you can avoid that? 3, the pandemic has caused a lot more people to want to move to more rural areas. So people have moved out of London because they're finding that, what is the point of spending so much money to, live in a property in London when I can get a lot more for my money further out. So places whereby you'll be able to get more rooms, which means you can actually create a home study for yourself, particularly in times like this where everybody is working from home. Properties whereby you can get a garden. Maybe when you were living in London, you could only afford a flat, but if you move to a more rural area, you'll be able to get a bigger place with, outdoor space. Essentially, the pandemic has caused a lot more people to reprioritize and basically race for space. So in this race for space, I just want to add that this has generally increased the prices of houses in comparison to flats. So you'll find that the growth of flats, in terms of prices, sort of remained stagnant or maybe even dipped a little bit, whereby with houses, prices are increasing because there's a lot more demand for houses because you have more space. You can get a garden, which a lot of people would have found very useful and helpful for themselves during lockdown, well, the first lockdown anyway. So investors, that's another little hint for you there. If you're looking to buy a property, look ideally at houses because this is what people are looking for. Okay, so we've got all this information. Now the question is, what do we do with it? So my investors, I'm talking to you here. So first of all, although it's technically a seller's market right now, which basically means that the market is in favour of sellers because obviously they can put up their property prices higher and get more money for their sales, this does not mean that as an investor you run away and basically wait for prices to crash again. No, that's not what you want to do, because at the end of the day you can't time the market. What you want to be doing is looking out for good profitable areas whereby there's good capital growth potential, areas whereby you can get a good rental yield, and also an area where you can get good below market value properties. Now, buying below market value means that although it's currently a seller's market, you won't actually be buying at market value or market price, and therefore you still manage to save money. Now, buying below market value, as I've mentioned in previous videos, is basically whereby you're able to buy properties from motivated sellers, so people who have good reason for wanting to sell their property quickly, and basically also by buying properties that are of lower value because maybe they need some work. Again, if you haven't watched my previous video about the top 5 places you should be investing in property in the UK now, you might want to give that a watch, because I basically talk you through 5 profitable areas in the UK where you should be investing, where there is a lot of capital growth coming, and to be honest has already been seen in the past 3 years, as high as 18% in the last 3 years and as high as 9% in the last year alone. So yes, you definitely want to refer back to that video if you're keen to find a good profitable area, especially during these times where house prices are increasing. Second, as I mentioned already, you can't really time the market, and so you can't determine when prices will crash. So why waste time, especially as an investor? If you're trying to build up your portfolio, there's no point sitting around for potentially maybe even years to come trying to wait for house prices to fall. That's not how it works. What you want to do is focus on getting good below market value deals. If you need some help with this, the link to sign up for my property sourcing service is in the description box. 3, as a property investor, you want to be looking for houses rather than flats during this time. You've seen it yourself now, you've heard all the stats, all the newspapers are reporting on it. People are looking for houses, people want more space, people want gardens, have a barbecue, be able to lounge around and not just be, cooped up in the house. So as an investor, this is what you want to be looking out for.
Point number 4, confidently invest in cities outside of your own. So places like Nottingham, Leeds, Sheffield, because there's already demand. There's already a pool of people ready to rent from you if you buy a property out there. That's because there are many university students, many young professionals. Also, we know that properties are very cheap out there, rental yields are very high, and also they've seen a lot of capital appreciation already over the years.
Number 5, now I kind of feel like this point is now a bit of repetition of the first point, but yeah, although house prices are increasing, you can still buy below market value. So basically, you do not necessarily have to be impacted by the increase in house prices. I've spoken quite a lot in previous videos about buying below market value, so I'll just link the videos in the cards. When buying below market value property, the idea is basically you want to be able to add value from day one. It's almost like buying a property so that from day one you can have equity in it. Now let me give you a good example of this. Let's say you see a property listed on Zoopla for £120,000, but because it requires some work, you're able to get the property for £80,000. Now let's say when the property's done up, you can actually get £150,000 for the property, because this is how much houses of a similar build and type go for, in terms of sale price. Let's say it costs you £10,000 or even £20,000 to get the property up to scratch. That is £50,000 in equity you've already made from day one, or as soon as you're able to do the works, that is. But can you just see that? So buying in a seller's market does not mean that you can't make good money, but it's just about buying in a good profitable area and buying below market value and buying those good deals whereby you can transform a property and get a lot more out of it. So guys, that now brings me to the end of this video. I hope you found it useful. If you have done, please do give the video a thumbs up. Please do also let me know if you have any video topics that you'd like me to create a video for, and I'll go about in doing so. So thank you for watching, and I'll catch you later.